Okay. You know what? Just before I continue our conversation, it's important that we mark L&T's Q3 numbers that have just come in. I see a PAT figure of 2,470 crores. I'm just going to get that reconfirmed once again with our own numbers because it's definitely a big beat, really. Yes, 2,470 crores. It's a big beat compared to the ET Now poll of 1,700 crore rupees. This versus 2,352 crore rupees. So it's actually grown compared to the corresponding quarter. The revenue has come in at 35,596 crores versus 36,242 crores. So this is, I suppose, just more or less in line with expectations. There's been a good beat on the EBITDA margin front as well, which explains perhaps the reason why we have seen the profit after tax do so well. Now, here's what's interesting. The company has announced that they have got the highest ever orders booked in a quarter, a 76% increase year on year on the receipt of prestigious and large contracts. Their order book is at a record high of 3.31 lakh crore rupees, and the revenue for the quarter is testimony to the fact that we are returning to pre-COVID levels. This is something that the management has spoken to us about. It's definitely looking like a good set of numbers. Highest ever orders booked in a quarter. I think like the management as well said, testimony that India is slowly and steadily getting back to normalcy, especially when a company like L&T says that they have managed to book the highest ever orders in a quarter. That, I guess, is a very encouraging sign. Now remember that for the last 3 quarters, L&T has refrained from giving any sort of guidance which they usually give in terms of order inflow. I wonder if this time around, seeing the way things are picking up in the economy, seeing the fact that they have received a good amount of orders, they will sort of revert back to their usual policy of giving some sort of a guidance, if not for the quarter, then perhaps for the new fiscal year 2022 as well. We'll know that only when they start addressing the media, which will be at 6 p.m. today. I've got some more data over here. They've mentioned that during the quarter, the company was awarded the biggest EPC contract in the country, the prestigious high-speed rail order, and with this the group registered a strong growth of 76% in terms of order inflow. They've also spoken about international orders, which constituted 14% of the total order inflow. In fact, I think we are now joined by a guest to analyze these numbers.
Yes. Renjith Sivaram.
Okay, we have Renjith Sivaram joining in now on the phone line. Hi Renjith, thank you so much for joining in today on ET Now. I think, what do you make of these numbers? There's been a massive surge in the orders booked just in these 3 months. I'm not talking about 9 months, I'm just talking about 3 months. Large contracts, of course, a big chunk also came from that high speed rail order. And when we look at L&T, it's always looked as a barometer of how the Indian economy is doing. So is this representative of what we are seeing, on ground? And it's more or less, I guess it's a given that L&T is supposed to give such numbers.
Yeah, thank you for having me on the show. Yeah, definitely the order intake was expected to be a good, given this news flow was already there given the high speed, but the more share will be on the EBITDA front, which has been the major beat, which I see in the headline numbers. EBITDA margin has been a beat compared to the consensus. The revenue is largely in line, so probably the infra margin would have been better than expectation. That's what I gather, and that's a positive sign going ahead.
All right. This time, for the last 3 quarters actually, and of course, COVID as well brought about this kind of volatility in the environment. So it's completely understandable that, they've not given any guidance for the last 3 quarters. But Renjith, do you think that, this time around with the kind of confidence as well that, we're getting from the way things are moving on ground, though mind you, the company has said that COVID-19 restrictions continue to have an impact on project site execution and Hyderabad metro operations that led to a marginal decline in revenue from the corresponding quarter. So yes, on ground, in terms of project execution, things are still a bit volatile. But do you think this time around, the way things are looking, it will lend L&T some confidence in giving, a guidance? And if yes, what will be a number that would perhaps please the street?
I think we have to wait for the press conference of the PPT because because it's already 3 quarters, so probably they might take a view not to give or almost it's 1 month towards the last quarter, so they can give a color on like what's happening. But I believe that it's very early to get on whether they are going to give guidance because we can wait for the press conference for that.
Renjith, I just request you to stay on with us because we are joined now by Avan to talk about these numbers. Hi Avan, it looks like a good set. Heavy engineering has done well because they've got some great nuclear orders as well. Defense engineering too has seen growth. I think across all segments, maybe save 1 or 2, it's been a good set from L&T.
Right you are, Mubina. It has been a wonderful set of numbers. Take a look at that PAT number, very encouraging and well above what the street was penciling in at 2470 crore rupees. This is, you've got the revenue growth as well, which has come in a little bit below, but 35,596 crore rupees is impressive. The operational figure as well is looking good at 4,279 crore rupees. Margin standing well above what we were working with, close to 10.6%. At 12%. And just take a look at the consolidated order book. At the group level stands at 3.31 lakh crores. That's a robust growth of 9%, and that has been a very strong order book growth as well. Remember, the company has been awarded some very large orders of late. Just recently, the largest EPC contract in the country, the first of its kind with that high-speed rail order as well. The gross revenues for the quarter at 35,596 crore rupees, and it's been strong growth that you've seen across the board. Infrastructure segment has seen orders to the tune of about 45,000 crore rupees. They've seen revenue growth of 22%. The power segment has seen a revenue growth this time around, which has increased 29% on the back of a strong order book. The heavy engineering segment has seen revenues come in marginally higher than the previous year at 733 crore rupees. The defense engineering segment, as you said, has seen a revenue growth of about 2%. 1,022 crore rupees. There has been strong orders that they have received within the defense segment as well. Hydrocarbon, they've secured orders to the tune of 12,820 crore rupees, and the revenues here have come in higher than what they recorded in the previous year, 4,407 crore rupees in terms of the revenues that they have recorded here. And the IT and technology services as well has seen a revenue growth of 7%. Financial services as well has seen a growth this time around compared to what they delivered last time. It's been a decline, mind you, of about 4%. So across the board, it's been a very impressive set of numbers in terms of what I'm talking about, the segmental growth for the company. Renjith, if you're still on the line, just give us a sense as to how you're looking at the overall segmental growth. Hydrocarbon, power, defense, IT, all of them have seen strong growth.
Overall, when we see the execution has been largely what the street was expecting, but the major surprise has been the margin. Especially when you look at others, there is a massive beat in the margins in the others. So we'll have to look whether that constitutes because of some pickup in the real estate, or is there any one-off in the NABA power or something like that, because that's a huge number to look at, 655 crores of EBIT coming from others. And infrastructure margins have been better than expectation. People were penciling in around 5 to 6%, so it has come to around close to more than 6% as the numbers look at. So the margins have been the major beat, especially in the other segment and the services segment.
Set of numbers over there. Awan as well as Renjith, thank you so much for joining us today just to analyze L&T's numbers. Let me just read out a small excerpt of, from the outlook that the management has given. Yes, it's there's this post-lockdown pent-up demand, improved prospects across various segments like real estate, cement as well, seeing green shoots, steel, capex outlays, all are showing signs of improved confidence on economic levels, economic revival, pardon me. However, significant private sector-led capex could continue to remain in wait and watch mode in the medium term. So there's just this one sign of caution coming in from the government, and along with that, they're saying that on the global front as well, business sentiments remain cautious because of the localized repeat outbreaks of COVID-19. And new project opportunities are mostly seen in water, transportation, power transmission and distribution, and renewable energy and green fuels. So that's just summing up L&T's Q3 numbers for you. Like Avan said, and Renjith said, stay tuned because at 6 p.m. we'll have the management addressing the media, so we'll know about whether they, the current situation is instilling enough confidence in the management to be able to guide on what the future outlook is for L&T. On that note, remember that we were in conversation